Hi everybody, this is Alex from Expert4x. So welcome to today's support webinar for the financial turning point system. The previous webinar we covered the financial turning point in broad overview, and therefore what we're going to be doing in future is specializing on particular areas within the financial turning point technique in these particular webinars. There is a recording of the previous one covering the whole system. You can get that. If you don't have it, please just contact Mary MacArthur and she'll be able to send that to you. I see we've got quite a nice number of people in the room and some very familiar names, so welcome everybody. If you do have any questions, please just send them through and I'll deal with them in the course of this webinar. Right, so let's move on. There are two areas I want to cover today. I'm going to go through the whole market and look for entry points using the financial turning point technique as just an exercise for us to become very fast and competent at identifying these entry points. The other exercise that I want to show you is one where we use the financial turning point, elements of the financial turning point, to do a double in a day deal. I find a lot of Forex traders try to compartmentalize their trading and only trade one system at a time, and I just want to show you how you can use the financial turning point principles to enter deals that will double your account in a day. So let's have a look at that one first, and then we'll move on to the analysis of the market. So what I've constructed here is a deal where, and this is a recent deal. This is the 16th of February, so it's only last week that this particular deal happened. And this was a particular setup that occurred during a trading session. This was in the US session. There were some quite fiery announcements happening in that particular one. It was a Thursday. Let's have a look at what has occurred. Now, in terms of the financial turning point system, this obviously has hooked in the 20 oversold area and is hooked up, so that qualifies. The moving average is hooked up. We have a blue candle, which is one of the qualifying requirements, and the only thing that's not really great on this particular entry is that there is already a long candle. But if one looks at what's happening fundamentally out there, there were a couple of announcements that occurred around about there, and there was quite a bit of a rocket that occurred in the market, and there appears to be a lot of volatility driving this particular move. If we look at other systems, like the magical moving average, there's a very clear buy signal there, and also the move over the 50 line. There's also a clear divergence that's occurred, so there's a whole lot of signals that are helping us see this one. There's also a bit of a channel here, sort of a broad channel around it going down here. So right, so there is a broad channel running down, and it is bouncing on the bottom of the channel. There's also a bit of resistance support at that particular area, so there's a bounce that's happened there. In terms of the magic moving average, it has moved over the magic moving average after a considerable time on the other side, on the sell, in the sell mode. So that move is also quite substantial. So there's a number of techniques. Also fundamentally, there's a lot of things happening, a lot of volatility. If we go to the volume indicator, you'll see a lot of volatility, a lot of drive behind this particular move. So let's say we select this move as our double in a day transaction. So what we would do is we'd actually enter it, and I know quite a few of you don't know the double in a day rules, but essentially what you would do is you would calculate the number of lots it would take to double your account in a 100 pip move. So I've done all that homework for us. So what we would do is we'd enter a market order, and there it is. The amount of lots that I've calculated on a 10,000 account balance is 8 lots, and I would use a 30 pip stop in this particular case, and I would use a 100 pips target. So we've got a 100 pip target, 100 pip stop, and we have a trailing stop of 50 pips in place. So if you look at the situation there, that's the position that the stop would be, and that's where the take target would be quite high. It's out of the channel, or maybe not. If you draw the channel lines a little bit better, you must probably not out. So let's go into a buy here. So we buy there, and as you can see, it's really a whole lot of systems that are saying buy. Then in terms of the double in a day system, you would then put in pending orders around about 50 pips up from your sort of halfway to the target, and that pending order would have a 30 pip stop and would have a 50 pip target. So I'll put that in, I'll enter them in. So the take profit is at the same place, the execution price is there, and the stop loss is there. And I'm using 4 lots, which according to the double in a day formula, that's how many you use. So I'll go ahead and place it. So now what we have is we have an active market order with a 30 pip stop and a 100 pip target, and we have a pending order of 30 pip stop and a 50 pip target. And should that pending order be activated, the deal will become a risk-free deal. In fact, what I do is once the price has moved about 15 to 20 pips, I move the stop to break even anyway. So the whole deal becomes a risk-free deal. It's only the first 20 pips that are the critical ones, and you've got a 30 pip stop loss. So all you have to do is you have to find an area where there's going to be a 20 pip jump. And then you can do a financial turning point trade, because after 20 pips it becomes a totally risk-free deal. As it moves through its various levels, it is totally risk-free, and that's the beauty of that particular technique. Anyway, so remember, we're still using the FTP. Now let's just test it against the FTP. There's a zigzag peak. Oh, it didn't touch. Okay, there's a zigzag peak, and it did touch, so that immediately qualifies us to trade this trade. And there's the next zigzag peak, and it did touch. So we've had 2 touches in the last 3, so we well and truly qualified to take this buy. All the conditions are met. It is hooking up, the candle is right, and we have a hook. This is not by the way, this is not a FTP divergence entry. It is a standalone FTP hook on an oversold situation. Okay, so on we go. So let's advance the trade. Up it goes. It doesn't threaten the stop. It went quite nicely up, and we were in a position to move the stop to break even, which I won't do in this exercise. And there we go. So we get another big boost in the market, a nice long candle. It activates the second buy. Let me just show you the open positions. So we've got 2 transactions active. We've got the 8 lot one and then the 4 lot one. You can see the following stop of the 8 lot one is almost at the same place as the stop for the smaller one, which is what we want, because if it comes back, we have lost absolutely nothing in this deal. It is a break-even deal. As I say, it's actually a break-even deal after 20 pips, or a no-risk deal, should I say. Right, so we've got our 2 deals active. We've got our following stops in place, our stops on the second deal, and very high volatility in the market. So on we go, and eventually it activates the targets. And let's have a look at the actual account history. And as you can see, I hope you can see, we've now had 2 successful deals, one with 8 lots, one with 4 lots, which have essentially doubled our account. Now that's using the FTP entry signals. So if the FTP says no, we have to put a stop 200 pips lower, doesn't matter, we still use the FTP signal to enter this deal. You don't need to stick regimentally to a particular process. If you want to use the entry from one from trading technique and the exit from another one, or you want to confirm your entries like I did with various techniques, the moving average crossover, the magic momentum, the divergence technique, there's a whole lot of other techniques that I use to justify this particular trade. So there's an example of a double in a day trade. It is not as risky as people think it is. You just have to get the first 20 pips right. That's it. Once you've got your 20 pips, you move your stop to break even, and there you are. You haven't lost a single thing. And that is why many of these deals, in terms of the double a day, you enter on the 1 minute or the 5 minute charts and then let it take you. Anyway, so I just wanted to give you an idea that the FTP system should not be seen in isolation, shouldn't be the only system that you trade. It should be part of your overall trading experience and knowledge, and you should be able to support your trading decisions using many other systems at the same time. You don't need only one system, you can use a whole lot of other systems. Now in the optimization phase, says you can change anything you want in the FTP system as long as it improves the FTP system. There you are. So please refer to the book, Insecure About the Settings, but certainly you can set these whatever you want. And your gearing, there's no ways that you can do the double a day with a 50-to-1 account. If you can't have access to highly geared accounts, then unfortunately you can't do this particular trade. Well, let's move on to the market as it is at the moment. Now, what I have in my, you can see I've got so many profiles, it's just incredible, a huge amount of profiles. So I have a set of profiles where I have set up the financial turning point system based on a daily, 4-hour and hourly chart. That's the way I like trading them. I like looking at all three at the same time and identifying trades on that. And then I flip from through every single currency right down to the yen. You can see there's every single currency down to the yen. So what I'm going to do today is, and I need you to respond if you don't agree to any of the decisions that I make. So please do that, but I'm going to run through this very quickly, and I'm just going to focus on the entry criteria of this particular system, just to make sure that everybody's happy about the entry criteria. All right, so, and I also want to show you how quick it is to spot the entry criteria, and that's why I use most probably 50 charts when I trade the financial turning point system. You can use 50 charts and quickly evaluate whether you have a deal or not. Okay, so here we don't have a deal. The moving average is still pointing down, and that one's pointing down. We need it to go, so that's not a deal. This one has gone overboard, but the moving average is pointing the wrong way, so or still pointing down, so we haven't got a deal there. Same thing here. It has gone oversold, but the moving average is pointing down. So we'll just move on to the next currency. At the moment, this one is overbought. We need the moving average to hook up, so no deal there. This one's sold, so we need the moving average to move up. No, there's no deal there either. Okay, so very quick, we've already done two currencies. Just shout if you see something else that I don't see, and we move to the next one. So here we've got an FTP deal, don't we? Now let's have a look. You see how quick it is to see it? We have a hook in the overbought environment. We have a downward sloping moving average. That hook at the moment is of not too much consequence, but what is of consequence is that the candle that we're trading on needs to be the same color as the direction that we're trading in. So this is we've got about 70% adherence to the trades. Now what we can do, if you see something like this, it looks like a pretty good reversal signal. There's a very strong divergence, not when the turning point is in the overbought environment already. You'll see later on when we look at it when it's not in that environment. But essentially we can't enter this deal because the candle's the wrong color, and that one's still nipping up. So now you have a choice. You could actually put a pending order down there and say if the price goes there, what will happen is that will be pointing down, that will be pointing down, and we'll have a candle the color that we want. So you could put a pending order in there and trade it that way. I often do that because I know that then there will be alignment of candles. Okay, so let's move on. This one's pointing down, that one's not in the overbought, we don't need to do anything. That one's overbought, that one's pointing down, so we don't need to do anything. And we'll just move on. All right, here we have it pointing down. This one isn't in the overbought environment, so we needed to reach there before we can trade up. Too late. It's much too late to trade downwards. So pointing down, that's in the oversold environment, so we needed to hook up, and that one to hook up before we can trade. It's too late to trade this one up too, and that's the same thing there. That's pointing down, that's pointing up, no trade. Okay, so you can see how fast it is to evaluate the trades. Again, I think that's part of the but also don't restrict yourself to one currency. Don't go and sit and study the euro 4-hour chart until an FTP trade comes on. Rather trade a much bigger number of trades. Here we've got a similar situation to the previous one. We have a slight hook, we have a potential hook here, and again, if the price goes to more or less that level, then that will be hooking down, that will be hooking down, and the candle will be red and all conditions will be met, and you can then put a pending order over there. So you project, so in certain such situations you can actually project yourself into the future, and you can say conditions aren't really met at the moment, but if things change and that becomes a red candle and everything like that, then that will be pointing down, that will be pointing down, and all conditions will be met. Question has just come in: if you find a trade at this time of day, meaning that this is a very low volatile period to trade, will you take it or wait until nearer to the European Open? No, you trade what you see. So if this is the time of day that I evaluate the charts, as I say, you would put pending orders in and wait for the European market to push it down or the US market to push it down. If it doesn't, it will just carry on. But you trade what you see. Especially on the daily chart, it really doesn't matter which market you're using or these kind of charts. So if this was, yeah, I think it is a factor to take into account. We are evaluating it in a low volatility period. That's probably a good time to do it, because that's where you don't want to evaluate it when the run's already happened. Whenever you evaluate it, that you trade what you see on the chart at the time of evaluation. That one's in the middle of nowhere, so we don't even look at that, and that one's also in the middle of nowhere. It's neither overbought or sold. So we'll just carry on with this one. That one's still trending, that one's still trending, and that's in the middle of nowhere, so we'll move on. See how quick it is to evaluate the market. That one's gone overbought, but it's trending. That's overbought, but it's trending. That's trending, and it is overbought. So we have a bit of a trending market, and the financial turning point is not crazy about that's not overbought or oversold. That's overbought but trending. That's neither overbought or oversold. So you can see how very quickly, and we still haven't seen a divergence entry. So let's see if we can spot that's. Question is, would you take the Australian yen and the Canadian yen signals or only one of them as they are both yen currencies? So what you would do, what I'm doing here is the first layer. So what you would do is you'd identify potential entries, or when you've got let's say we come up with about 10 potential entries. The next step is to cut them down in terms of which are the best entries that you can find. So you most probably cut them down to about 4, and then you would use things like currency exposure. If all 4 of them are Aussie trades, then obviously that's not going to work too well. You need to get a nice balance of currencies in your shortlist for entries. So certainly, I think that's a valid question. You don't want to expose yourself excessively to one currency. You're not looking at exits at the moment, and you can certainly look in the book for what exits you can use. You can use, the main ones are the moving average crossovers, but you can also use trailing stops if you like. Those are the things that you evaluate at the time of trading. If you have a very strongly trending market, you might want to use trailing stops. If it's a slow market but looks like it will really go a long way, you might want to just use moving average crossovers. But you have to evaluate it at the time. I cannot tell you trailing stops are better than moving average crossovers. You have to see what the nature of the market is on the day that you're trading, and take a judgment. You just have to take a chance. That's all. That's mainly what forex trading is all about. It's a bit of a gamble and taking a chance, but obviously with the odds stacked in your favor. always. All right, these are in the middle of nowhere, in the middle of nowhere, in the middle. I'm not even going to look at the chart. These ones haven't been overbought and oversold. That one's overbought, but it's trending. That one was a potential sale at some stage, but it'd be too late for that one. And we move on. All right, here's overbought, but trending. Not overbought, not overbought. Very quick. Euro, not overbought, oversold. There's a. It's too late. This is a sell. This is a sell signal. It's a little bit too late. It occurred. Let's just see. That's almost a sell signal. It occurred round about there, and the hook was favorable. It could have entered. Seeing that, the other thing that I do is sometimes I say, oh, look, I would have entered on that candle. I would have. Now, if it's still looking pretty much marginal that it's going to be selling, I would either put a pending order at the place that I would have entered, like there. I would have entered right there. That's a valid FTP signal, and I would let the market decide whether it's going to go up or down. So that's an interesting one that I would have entered. So, and the market and the price and the signals are still, the moving average is pointing down. Signals are still valid for a sell. So I might even enter that, because I would have been. It's a very strange concept, but this one's in the middle of nowhere, so we move on. So this is an interesting case. You can decide, but then again, this one can go onto your shortlist, and you can decide whether this is a strong enough signal. It's a head and shoulders there, and whether it's a strong enough signal to head and shoulders is always very good at the end of a long trend, which is this one that you see there. All right, so let's move on. So again, don't isolate your decision making. That's not an FTP. All right, so now we're into the pound franc. Pound franc, no overbought, oversold. Here we got oversold, and it's hooking up. All right, so again, we have a qualifying signal, except that the candle is the wrong color. So again, you've got the same situation as that previous one. You could put a pending order there, because if the pending order, if the price reaches the pending order, that will be a blue candle. That will be pointing up, and that will be pointing. But certainly that hook is enough to catch your interest. There we are. All right, that's in the middle of nowhere, so we don't need to worry about that anyway. Right, here we are. This one's about to make a hook. You can see it's about to. It's very similar to another one that we looked. Very similar, very strong trend. It's got extremely tired, got a bit of vertigo up there, and it started looking down, and this might start falling. So, but it's not qualifying. That's pointing up, that's pointing up, and the candle is blue. But again, project yourself into the future maybe, and say, what would the situation be if the price went there and started making a new low on that previous candle? Then this candle would be red, that one would be right down there, and that would be hooking. So maybe that's another one that you can project yourself into the future and say, I might put a pending order in there. Pending orders are good for the longer term charts, the daily and the 4-hour charts. Don't do them on the 1 hours too much, because things change too quickly. This is in the middle of nowhere, and that's in the middle of nowhere, so we won't trade those particular ones. There might have been a FTP signal a few candles back on this particular trade. You can see around about there, the moving average was pointing down, the RSI was pointing down, and the color of the candle was right. So at that point there was a valid. And again, you could say, oh well, if I was going to trade at that point, I could almost put a pending order in there to trade it. It's going to come very similar to that trade. So again, you'd say which one is the best one. All right, so that's the pound yen. We'll just move on. Because this is neither overbought or oversold. That hasn't reached an oversold, and that's too. So we can move on the pound. The Canadian dollar, All right, here's a debatable one. This one is not oversold, so we won't overbought, so we won't look at this, and that one's still trending, so we won't look at that. Here's an interesting one. This is a bit, I would say this is an entry, and I'd like to hear the opinion of people in the room. Essentially, what I'm saying is that here we've got an example of a divergence entry, because this is a divergence. The first leg is certainly oversold. The second leg is not oversold, but it is part of a divergence. So it has hooked pointing up, moving average has hooked and it's pointing up. So here we have an FTP entry. You would enter straight away, you would just do a market order, but you put, what you would do is you put this one on your short list, and you'd say, this is one I want to come back to and compare with all my other alternatives, because you really must trade the best setup that you can find. And if you can find 10 really nice setups and you only trade 2 or 3, then you've chosen the best of the best. So that hasn't arrived yet, and that one's trending too much. So that goes on to the short list, and on we go. In the middle of nowhere, in the middle of nowhere, middle of nowhere. Okay, that's the franc. Then the yen, here's our last customer, and this one's just trending out of control. The yen is just the weakest currency around at the moment, and it is trending like absolute crazy. Not really worth. Interesting. Let's see, make this a bit bigger. That's just on the side. Okay, so FTP wise, we can't trade too strong a trend. This one we can't trade, they're pointing the wrong way. And this one is getting ready to potentially point down, but at the moment that is certainly not. It's overbought, pointing down, but the RSI is still pointing up, so no trade there. And that's the end. We look how quickly we have covered a good, let's just see how many charts we've covered. 3, 6, 9, 12, 15, it's about 18 charts. We've covered 18 charts in the space of most probably 15 minutes, and we have our shortlist now. So the next step is to really take the shortlist and refine that shortlist and say, all right, which are the strongest signals that you want to put in. And when you do your refinement, you consider not exposing yourself to one currency in particular. That's one of the guidelines, and also the strongest signals that you can find and trade those. And just a comment that's come in, the US CAD hasn't been overbought on the daily. Would that stop you from taking a buy? Oh, there you are, Frank. US CAD. Something overbought on the daily. Wouldn't that stop you from taking a buy? I see what you mean. Okay, let's go and have a check. So you're referring to the zigzag rule. Well spotted. So there's our first zigzag rule. No, it didn't go overbought. There's our second one, and marginally. But the third one certainly was, and that's fine. 1 in 3 is fine on the zigzag rule. If one of the last 3 peaks on the now, what you could say is maybe I shouldn't have used that one, but that one there. So if you're using that, then certainly your comment is 100% correct. If you're using that zigzag peak there, then that hasn't gone overbought, that hasn't gone overbought, and that hasn't gone overbought. So you're right, that's not. So we take this one off our shortlist. Well done. And those are the kind of things too that you do when you're doing your evaluating your shortlist. Is you're verifying the validity of the actual trades. So well spotted there, Mark. Okay, so that's basically all I wanted to show you today. I wanted to show you that, firstly, when trading, don't be very narrow-minded. Look at all the trading methods that you know. If you know the magic moving average, if you know the magic momentum, if you know channel trading, if you know a whole lot of things, then don't limit yourself by not using that information. If you know about what pushes the price when certain economic announcements happen, then all that helps a lot to motivate trades. You can't just say, oh, there's a hook and there's a hook, I'm going to trade. That's a little bit too narrow-minded. All right, so that was the one exercise, and then we looked at the entries for the current market for the daily, 4-hour and hourly charts for all the currencies that we normally trade. If you do have a question about timeframes, the best is to test them for yourself personally, or use a program like I'm using here to back test them. Then you'll soon find what your preference is. Also, it's a lifestyle thing. If you've got all the time in the world to trade Forex, then you would tend to trade the shorter charts. And that if you're working and you have a lifestyle that you don't want to watch the charts all day long, then those are more important factors than worrying about what is the best chart to trade, a 4-hour, 1-hour chart. That you should find out for yourself. Now, I might tell you, oh, it's a 1-hour chart, and it might not work for you because you don't use the filtering systems that I use when I evaluate trades. So very difficult to give a general answer. I think it's best to be worked out personally. Hey, I think we've through for today's support webinar. Thanks very much. We've had a lot of questions coming through, and I hope this has helped you a little bit. I think you can see how very quickly it is to find transactions using the FTP system. So rather use more currencies and more time frames than limit yourself to maybe 1 or 2 currencies. From me, Alex de Plooy, thank you very much for your attendance, and we'll speak again next month at the next support webinar. Cheerio.